So our main focus is on organic growth with the brands that we've launched, such as Oath, and we think we can get massive success over the short term by growing what we've got.
Hello, you're watching Proactive. I'm joined by Scott Livingston, the CEO of Turu. Scott, very good to speak to you. To start with, could you give us an overview of Turu and the businesses that make up the group today?
Yeah, sure. Thanks for having me on. So Turu PLC, we basically own a number of challenger brands and subsidiaries in the consumer health and wellness space that we are growing and trying to build. We have a company called Juvela, which is based in Wales, and we make gluten-free products for the celiac community. Actually, it's a prescription product sold through the pharmacy channel. A great business. And what we did with that brand is we launched a new mass market gluten-free product called Oath, OAF. And this brand, if you like, has a number of products under it: pizza bases, sub rolls, sourdough, breads, etc. And we've done exceptionally well. We've launched in Tesco. We're talking very seriously now with other retailers. We've got great traction with social media. It tastes good. We've done a lot of research on how the product should look and come across and taste, etc. And we think that we've done a really good job. It's very exciting to basically go into what is quite a fragmented market. We also own a brand called Pulsin, which is a protein bar and fiber bar business and nutritional supplements, which we spent some time turning around. Hasn't been without its challenges, but it's a 25-year-old brand, very well known, has a very sophisticated set of ingredients. We expect to be expanding this brand into a massive market. It's a multi-billion-dollar market, the snacking bar, industry in the UK and Europe and the world. We have a lot of new innovative ideas. We want to grow the existing products. We then have another brand called Purely, which is a plantain crisps business, which is very small, but we're working towards building that into a better known brand. And we have a tech division called Market Rocket, which actually we've grown the revenue substantially since acquiring, and that is obviously a nice complement to a lot of our D2C and consumer brands.
I mean, looking at your market positioning, are you looking at other brands like those as you continue to grow?
Yes, so we don't want to overcomplicate matters, and we are, alert to opportunities for acquisition, but it would need to be quite strategic in terms of maybe they share the same ingredients. We can run those products through our factory, increase their margins, etc. There's a lot of distress out there, a lot of opportunity, but we have, we want to keep our projects uncluttered, if you like, to have a lot to focus on. But we are looking at potentially at acquisitions, yes.
Looking at your most recent financials, Scott, you achieved positive EBITDA and you invested in new product lines. How do these investments set Turu up for growth?
So yeah, so we are EBITDA positive. The operating companies, it's been a challenge, obviously, over the last few years. The environment in the UK has been extremely difficult. We believe we're turning a corner and we're coming back on slowly to an even keel. We think that we can grow these existing brands dramatically, and we think that we're also in sectors that have a lot of headroom. Health and wellness and reading ingredients is something that's becoming more of a shift as opposed to a trend. Even low income area teenagers would read what's on the back of a product. They'll read the ingredients. So we think we're in a sector that's got set for massive growth and that is, hungry for innovation.
I mean, where do you see the biggest opportunities, Scott? And would you be looking for organic growth versus acquisitive growth?
So our main focus is on organic growth with the brands that we've launched, such as Oath, and we think we can get massive success over the short term by growing what we've got. We also do have a number of brands that we could acquire that we perhaps could grow faster, or, and it comes down to a lot of working capital availability. So, we would look to potentially fund that at some point in the future if we had real opportunistic acquisition opportunities.
And what would you say is the differentiator for Turu in the market? What sets you apart from your peers?
Well, we're focusing on products that are less, full of a lot of chemical nasties, which is obviously quite common in a lot of products. We're also streamlining and focusing purely on health and wellness. So really, it's an opportunity to invest in a category that is growing, that is quite specific, trying to remove various ingredients from products, trying to focus on the functional benefits of snacking. and also riding a wave, that's quite dramatic in terms of people wanting to eat better and wanting to focus on what's going in their body.
Scott, I hope you'll continue to keep us updated with your progress. Thank you very much for speaking with us today.
Thank you for having me. Thank you.
Scott Livingston, the CEO of Turo.